Hey everybody, I want to make this video because, well, you know what, for some odd reason, I've been busy with personal things in life, but, I did want to make this video because I've seen a lot of people very skeptical about the stock market's conditions, and I've also had a lot of friends and family, discuss these things, and the weird thing to me is that a lot of these people are worried, but I'm not because, well, one, I have cash on hand. As you guys have known, I've been pretty bearish on the U.S. stock market because when this, in my opinion, the U.S. stock market and assets in general, it's pretty scary when it keeps reaching all time highs, week over week, month over month. That's pretty insane, and I do think that Chinese equities are heavily undervalued. I'm not a financial advisor, but I do look at these things. And something about me is that while I do swing trade occasionally, depending on the conditions of the market, if I feel comfortable in it, I tend to be a long-term investor, and it's always worked out for me, whether it be in Tesla, other growth stocks that I've also been in, Neo, and things like that. But I'm not. There's no real point in listing out the companies that I've done well in, but I do follow Tesla and Neo pretty closely, along with other growth stocks as well. Um, I also do follow a lot of Chinese blue chip stocks as well. So one thing that I did want to talk about in specific was the idea that there's more cash on the sidelines than ever. And what this means is that, well, there's more cash on the side than ever, right? So when you have billions of dollars leave both the Chinese stock market and the US stock market in such a short amount of time, after you have all this monetary spending in a very short amount of time, well, all that money's not going to disappear. It's not going to vanish into nothing. It's not going to other countries. It's still there. It's just on the side, waiting to buy back in, right? Just like anybody else in general. If you ever noticed that people in general, when they sell out of a stock or they're actively trading a company or a stock, oftentimes if they're they take out money from a company because even if they like the company, they think the stock's going to go lower, and then they make a trade by taking profit and then re-entering. So it's not like these people particularly lost faith in the company, especially when all the indices are being pulled down now, even though regardless of that, the stock market was overdue for a correction anyway, and there were other companies within that weren't really being shown to have been underperforming in terms of in terms of the stock price relative to the index itself. I think that it's important that people realize that regardless of the short-term volatility, it doesn't necessarily mean that these companies are gonna go bankrupt, especially when a lot of these companies like Neo and Tesla have a lot of cash on hand and could actually still raise more cash to be able to sustain itself for years, right? I believe that Neo has anywhere from $7 to $9 billion of cash. So does it seem like they can't ride out short-term volatility? No, not to me. But I think there's a few things we need to consider also. Is that one, there is a lot of cash on the sidelines waiting to buy back in. But recent news regarding around Neo is that Neo is unfortunately moving with growth stocks, the Nasdaq, speculative stocks, Chinese stocks, small cap, etc. So I think with that being said, we need to not look at Neo as just an individual company in the short term, but we need to start looking at the overall market sentiment. And that's fine because it means that, odds are the stock market can't just keep crashing. It has to make a reversal eventually. There's more green days than red days historically. On a larger time frame, these pullbacks are going to look like nothing, and it's just going to look normal on a 5-year, 10-year chart, even 3-year, 1-year chart, depending on the severity. So I think I was considering a few things that was going on because I have been looking for entries personally. One thing would be I think personally, because we should be comparing Q1 2021 institutional investors and whether or not they've bought or sold, and which ones are buying back in, which ones are selling, and we should be comparing volume, things like volume, institutional holdings, and well, just the overall sentiment around that, especially when it comes to the types of investors and the types of people holding. When we compare it from this year, last year, and the year before that, for obvious reasons, tax purposes, things like that. There's a lot of reasons when it comes to institutions and how they hold a stock that it's really important that we do compare last year's volume and stock information regardless of the company's performance. Another thing we need to consider in the short term are things like, what institutions are buying, holding, etc., selling. We should also be considering the overall market sentiment as well. Maybe a consideration that we should be also considering in the short to medium term that the ET7, ET5, Hong Kong listing, all these partnerships, and the company guidance, and whether or not these things are going to be are going to be on time, or there's going to be any hiccups. To me, from what I've seen, it seems like NIO is going to be fine on these things, and these catalysts will prop up the price of the stock, in my opinion, because you can't just ignore these things. They're pretty big deals. They've been heavily anticipated. And there was another thing that happened recently too, which was that William Li, the CEO of NIO, Wei Lai, ended up buying NIO shares as well. And this is a big deal because, despite what people think, William Li does have more access to information than anyone else in general. William Li, the CEO of NIO, has more information on the company, the policies around the company, the government of China. He has access to professionals when it comes to the stock market, financial systems as well. So, because he has all these access to information and people, he can determine when is a good time to buy in and when it's not. So that's really important. It's also important to remember that no one can really time the market either. So with that being said, he can't time the market either. But time in the market always beats timing the market. So because of that, we may not have a reversal today or tomorrow, but if William Li is buying in the 20 range, it means that he's expecting to make cash back, right? He's expecting to make money back. This could be next month, next week, tomorrow, next year, but he's going to make it back, okay? And that's really something important. And for me, it's always been easier to predict what's going to happen in the long term and medium term, but not the short term, because there's just too many things going on. There's too many variables. I do believe that because NIO is such a great company, that despite the recent movement, the company is really good to actively trade, because even if you're bag holding the stock, the company's so good that it's not really that bad to bag hold. It just means you're going to be a long-term holder in the company. It's not scary like holding a space or Lucid or XPeng or Tesla or a lot of these other growth or spec companies, because NIO is pretty undervalued in my opinion. And the company is so amazing and has such great projected growth that it's not really scary to be a long-term holder if you do mess up a trade. The only thing that sucks is that if you don't have cash and you need to raise cash, then yeah, I could see why you would be concerned about the current movement. But to me, that's why I don't really understand why people are too worried, because it's all about being patient at this point. And in the medium term, I think that we do need to consider things as the China and US relations. What a lot of people get wrong about, in my opinion, about the Chinese and US relations is that while at a surface level, mainstream media always wants to pump things that will get views, and negative news always gets views, I believe that China and US relations are even getting better, because we see when it comes to trade, Chinese exports are only increasing. When we see Chinese GDP, it's raising as well. When we see companies from the US reliant on the US, on China, these companies from the US may see some kind of maybe a stag. Maybe they might stagnate when it comes to their revenues from China. They might slow down a little bit. It's still going to increase, but it could slow down because of Chinese local competition, right? Like NIO taken away from companies like Audi, Mercedes, BMW. And, Chinese brands are becoming more prominent, and they're being more purchased by local consumers. So even if Tesla, right, where it's relies heavily on China, while they might decline in sales in China, Chinese competitors might pick up those those sales, and it'll be reflected in the earnings. And this will be probably priced in over a few earnings, right? It's not something that's going to be considered immediately or recognized by Wall Street. These are things that take time to realize. So I think that's something that could be shown and priced in the next few earnings. Because there comes a point when you should view a economy just like a company, and the people like the employees. So there's that too. So because China's economy is doing better and better despite how the stock market is doing, there comes a point when the fundamentals have to reach and correlate with the stock price. So, and the asset prices too. So, the Chinese stock market stocks just can't stay down forever. They have to go up eventually. This could take time to realize, though, especially because there's not only incentives not for these things to go up, but there's on an individual retail basis, but it goes to a whole economy as well, and political things as well. So definitely do research on that. When it comes to China and Taiwan, I think people also need to realize that Xi Jinping has never said that he needs to invade Taiwan anytime soon. I believe that Xi Jinping wanted to either get or obtain or acquire Taiwan by 2050 or 50 years from now. It was one or the other. So these things don't have to be a straight up conflict or physical conflict. These things can be made through economic moves, through trade, through some sort of Cold War or some sort of thing like that. But it doesn't. I don't think that China's ever going to have a confrontational physical war with anyone, whether it be the U.S. or China. These things are going to happen strategically through trade and economics. Nothing else. Politics, but nothing else. I think it's foolish that people think that China would have a physical war because China already won the game. It's all about being patient at this point. So I don't believe the narratives that the U.S. media is pumping up. It's what the U.S. wants, and I can see why, because they're warmongering, and they've always wanted to have wars, especially with rising powers. But no. The U.S. profits from these types of wars, so no, it wouldn't make sense for China because China's already winning. No one's stupid enough to believe. Even Xi Jinping doesn't think that, okay? He's going to win through economics. And at this point, it appears to me that China is owning more things such as the means of production, resources, trade, partnerships with other countries as well. And they're being more and more relied on, which, again, means that they don't have to go have a physical war. They can win through economics and political power. So, no, they're not going to have a physical war. It doesn't actually make sense either. So think rationally, think critically, and get your information and do your own due diligence as well. I also think that we also need to consider things such as NIO's partnerships and how that's going to play out. NIO Park, which is not a small deal at all, it's a very big deal. And the company's progressions when it comes to sales, deliveries, notoriety, retail, and all these other things too. And when it comes to the long term, I would just take a maybe a little bit hands-off approach and just focus more on the quarterly earnings and things like that, and the longevity of the company and its business model, how that will transition every 5 years or 10 years, and how it'll allow NIO to stay relevant. And I would also look at things like the deliveries, social media, and the economies of both China and the US and other things like that, and yeah, because those things are really important. So I would be looking at those things rather than just the company individually on a larger time frame. when it comes to a more speculative idea, when it comes to maybe the Fed and the U.S. government, I do have my own opinions on what's going on. Because because the entire market is going through a lot of problems right now. My speculation is that the Fed knows that there's a lot of inflation pressures, right? And they're going to alleviate that. But this isn't done just by raising or decreasing interest rates. These are done through multi-pronged approaches, right? So because we have supply shortages, because we have labor shortages right now, a lot of people who were on unemployment benefits, they have more money than ever, right? They've been basically throwing all their unemployment money into very liquidable assets like stocks, cryptos, things like that. And because of that, their net worth is tied to that as well. And I'm pretty sure the Fed and the government has access to all these things and all this data. So I think that the stock market crash is pretty intentional in order to lower the net worth of retail investors, and then shake the weak hands out essentially, and then force them back to work. This will alleviate things like supply shortages, labor shortages, inflation rates. And then when people return back to work, people sell their stocks. Large institutions, the government will buy back these shares, the stock market, and then start pumping it back up again, like a pump and dump in a sense, right? And rinse and repeat. This has just historically happened. So when you have a lot of people on Main Street, like you and I, who have all their money tied into financial assets, the Fed will crash the markets to scare, I don't know, a couple million people back into work, and then that'll alleviate a lot of the inflation fears. So it can be a multi-pronged approach, right, to alleviate inflation pressures. So that'll definitely help a lot of the inflation pressures. And then we have things like China buying U.S. assets, which also alleviates inflation pressures as well. We also have Chinese monetary policies that are bullish for Chinese assets and bullish for U.S. assets as well, and U.S. companies, which in turn helps the U.S. economy. That will also alleviate inflation fears as well. So it is a multi-pronged approach. These are ways we should look at it. They're not realized in short term, so these are things that are realized over the longer periods of time. And this could take months, a couple months to happen, right? But if someone has, if some millennial, not millennial, if some yeah, okay, let's just pretend you have some millennial, right? And he has, I don't know, 5 or 10 grand in the stock market, right? And and that's all he has. He's like, you know what? I don't need to work for another year or something. He's just gonna chill all day long. If he has 10,000 in the stock market and then it goes down to 2,000, well, he still hasn't sold any shares, but now he's thinking, okay, he or she is thinking I have to go back to work, and they sell out at a loss, and then they're forced to go back to work. Stock market goes up higher, inflation fears are alleviated. And it is important that we understand that institutions and things like that, assets being propped up, does help alleviate a lot of the pressures, right, when it comes to inflation. So we have a lot of money printed in the past 3 years or so, but what alleviates all that? The cash didn't go on mainstream, which it's going into institutions in the stock market, which is good in a sense, because it does help alleviate pressures. It does help alleviate inflation. It does also tie into America's net worth and people's retirement portfolios as well, their 401ks, etc. So, in my opinion, you just have to look at this and plan accordingly. And there's really nothing to be scared about if you really understand what's going on. And you know what? I think that it's a shame that a lot of people buy into the fear, or that a lot of people buy into the mainstream media. I think it's a shame that people don't think critically about each situation. But you know what? We have these authoritative figures where we trust in them, right? Because we have a lot of things going on throughout the day. But I'm not scared personally, and I think there's opportunity whether the stock market goes up or down. It's really up to you to identify these things, and you need to think critically. And if you don't, you're going to be exploited by larger forces, which is what's happening here. But for me personally, I don't care. I'm not a financial advisor. I just think it's neat that people don't actually take the time to consider these things and only read whatever they see on CNBC or Market Watch, Yahoo Finance, the Wall Street Journal, these things. So, with that being said, I hope you all have a good day and think critically. That's all you need to do, and look at the data. I would look at the data, and then come to your own conclusion, and you can maybe make like 10 probabilities of what's going to happen, and then have enough, and then have plans for each scenario. But think critically, and don't listen to what one person says. Come to your own conclusion. Do your own due diligence. Not a financial advisor. And I hope you have a good day.